Hello and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's episode is sponsored by ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307 264 9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And today's guest is the founder of Feneck Consulting and an expert in the precious metals and mining space. Today, we're going to be discussing the price action in gold and silver, where he's currently seeing value when it comes to the mining stocks, copper's rise, and much more. It's John Feneck. Welcome back to the show.
Thanks a lot, Jesse. Nice to be here.
Yes, happy to have you back. Why don't we start with gold's breakout and silver breaking out as well? As we were talking about before we hit record, silver kind of retracing to just above $26 right now. But since last time we talked, obviously the price action's been very favorable. I'm wondering what your thoughts are there and what that means, perhaps most importantly from your perspective, what that means for gold and silver equities.
Okay, sure. So let's start with gold. We're not going to spend too much time on this because everyone and their mother has been talking about gold's move, and it's been fantastic. And hopefully, some of your listeners have seen what that means for earnings this quarter, right? We've been talking on your show for over 2 years that when gold starts cranking, watch Newmont, watch Agnico. Those symbols are NEM and AEM. As two of the three largest stocks in GDX, right, which is a $15 billion ETF, to do much better. And you saw January earnings were both those companies had great quarters, but April earnings last week were phenomenal. And so that's really encouraging on the gold equity side that the large caps are getting some love. And we'll talk more about some mid-tier and small cap names in a minute. But gold doesn't really have to be at the 2,400 plus level like we saw it just recently, right? We're at 2,290 as we speak. Who cares? We're seeing a huge breakout above what was real bad resistance in that 2075 to 2100 level. And I think it's caught everyone by surprise, including myself, in terms of the speed of this move. It just talks to the fact that there's a lot more people, not just central banks, but retail money now seeing this move and starting to chase it, right? Which is really interesting. The silver side has confirmed, which means that 25.50 to 26 was major resistance all of last year. And as you know, silver is my largest position. I never talked it up on your show like so many people do because I want people to follow this rally correctly as opposed to me talking up something that is my number one holding all the time. In fact, on your show, I said it wouldn't break 26, and I was right. But this time around, it broke 26 like butter, and that's really bullish, right? To get through a major resistance level real quick. And you saw what happened with silver price. It went from 26 to 29 at, plus, right? And so now at 26.20 during this recording, it's consolidated. That's fine. I think 25 to 26 should hold in here, barring any type of, weird CPI print on May 15th or something that could be material. And as for your question on gold and silver equities, we continue to buy stuff in the gold space where there's a lot of ounces in the ground. And in our view, the company isn't getting a fair shake given the fact that gold is just going berserk, right? If you look at something like Treasury Metals, TSRMF, Jeremy's a great CEO. They came out with news yesterday that they're taking over another company that is heavily owned by Frank Giustra, who is in the Mining Hall of Fame. Frank has now decided to put money into the deal. So now you've picked up a great new shareholder in Frank Giustra, but also, the volume was evident yesterday that people liked the deal, and the stock was up, I think, about 15% yesterday. Why is that significant to people? Well, we've talked about that stock on your show at 8 cents and 10 cents. It's now trading at 16.5 cents, right? And so, like, this is how quickly these things can move because they have 3 million ounces of gold in the ground before the deal, right? Like, that's huge. And you've seen some deals done in that region this year. So that part of Canada in Ontario is starting to get a little more love, which is very positive. Another that we just started here about a month ago, which we haven't mentioned on your show before, is First Nordic Metals. I met with the CEO just this week at the Washington, D.C. conference where I was speaking, and they're very excited about what they're doing there. They have 2.5 to 3 million ounces of gold. They are in Sweden, good jurisdiction. They have Finnish assets that they're probably trying to get rid of, in my opinion. In terms of when I look at the overall picture of the company, that would make sense to monetize that. And their goal is 5 to 6 million ounces, right? I mean, that company is trading at 17 cents US. I mean, these are incredible bargains, that we have to just look at. I mean, I've talked about Cartier on your show before. They're in the same boat. 2.5 to 3 million ounces in Canada. They have 30% of their float owned by O3 and Agnico AEM. It's like there's no possibility Philippe at Cartier is going to sell that company right here at 5 cents US. This is the time to go buy something like that.
Yeah, so you're right. When it's come to the majors, we have seen them wake up along with the gold price. Do you think that this will eventually trickle down? Obviously, you do, because that's where you're placing your bets. But what sort of catalyst do you think we need for that sort of success in the majors to trickle down to the developers and the explorers into the junior sector?
Well, I think we need more of what happened with Treasury yesterday, more M&A. And I saw a couple of my peers talking about this at the conference, saying it's going to be a great year for M&A. And I agree. I mean, we're already seeing a lot of deals done. However, I'll throw in the caveat that just because a deal gets done doesn't mean it's good for shareholders. And you can vote, with your dollars, right? Because none of these are done until the shareholders approve it, right? So, like, when I saw that Labrador deal, NKOSF, recently, there's no way I'm going to vote for that. You can't sell your number one asset for just $20 million Canadian in a gold rally. To me, that's ridiculous. Stock has responded as well. It's gone from 14 cents to 7.5 cents US. So people are voting with their dollars, right? Like, good for them, because we don't want to see management make poor decisions in a rally like this. We want to see people do what Jeremy's doing at Treasury, what Philippe's doing at Cartier, what Taj is doing at First Nordic, and saying, no, we're not going to sell here. We're going to grow this thing. And then if we want to sell it down the road at much higher prices, that's fine.
So you're talking about having conversations with these CEOs. What is it that gives you conviction when you speak to a CEO? What is something that you meet, you ask your series of questions, and you come away with kind of a firm conviction that, okay, this person knows what they're doing and this is a company worth investing in?
Well, one of the things you can always look for is how much that CEO is buying in the open market, not necessarily how much he or she has in terms of shares, because they could have been given to them at much lower prices, right? So if you see someone like Philippe at Cartier, he's been buying in the open market in 2022, 2023 all along. I mean, that's powerful to me. That's one of the things that got me interested in aligning myself with that company. It's, in full disclosure, one of our top 10 gold or silver holdings, because I think that with 30% of the float tied up with two companies that aren't selling any shares, and then you look at four of his large investors tying up another 7 to 10% of the float, that's one of the things I look for, Jesse, is 30% plus of the float tied up in good hands, so that if we have to have a vote, on a terrible deal, likely that deal won't go through, right? So it protects us as shareholders. So that's something that I would encourage people to do. Go to the presentation of whatever company you're looking at, see on that pie chart or that wheel, like how much ownership there is outside of the company in good hands, so to speak. And if you don't know what that means, you have to align yourself with someone like me who does know what that means, or just call the company directly. But management is always our first screen. The project itself is our second screen. Believe it or not, it's not necessarily the first. And the third is a close third is jurisdiction, because we've seen, as we've talked about on your show many times, things go awry in certain parts of the world. I will say that sometimes that type of volatility is an opportunity. So when you look at something like Mexico, for example, this has been front and center for months now, right? We have an election coming up. I believe it's June 2nd. And that's going to be very material for a lot of silver juniors and gold juniors that are in Mexico, right? We mentioned on your show before that there's over 90 silver juniors alone in Mexico. And some of these are open pitable type situations that will be affected by the election, right? So you have to look at that carefully and see what happens June 2nd. And then keep in mind that nothing happens overnight. So it's not like something's going to happen in June that might be material to these stocks necessarily, because the government has to get put in place, and that will take probably 3 months or so. But by the fall, we should have some good clarity on how these companies are going to look. And I've been buying some of them in advance. I've mentioned Silver Tiger on your show before, SLVTF. They came out with a PEA, and the market like yawned. It's like, this is a real project. This is run by Glenn Jessam, who's been in the business 30 plus years, and he spent all of his career in Mexico. So do you think if someone like that knows the locals? Yes. It's like not every company is created equal down there. Another one that I just started to look at and buy here is Sonoro Gold. Same thing. SMOFF is run by John Darch and Ken in the CEO chair, who are both seasoned veterans like Glenn, 25 plus years in mining each, and they have a smaller project than Silver Tiger, but it's being brushed the same way by the market, which is let's wait and see. As a value investor, sometimes you have to take risk ahead of the wait and see crowd, right? Because like if you wait too long, people are going to flood into Mexico if the right party gets elected, right? Like you have to buy now to buy cheap, and then add to your position if you're right, in my opinion. Lastly, in that sector of the market, I'll just mention Guanajuato Silver, because I just met with James at the conference. We had about 2 hours together, and I mean that stock is getting killed right now. It's gone from 0.11, so 11 cents US, in the rally recently up to 23, and is now under 13. I mean, so you're trading 2 cents off a multi-year low for a company that just produced 1 million silver ounces last quarter. It's like ridiculous. I mean, James is just scratching his head. I mean, he put on a really good presentation, and all of those companies are getting, I think, unfairly treated or fairly treated. We'll see in a few months because of the Mexican overhang.
Very interesting. Yeah, jurisdiction obviously something that people need to take into consideration depending on what government's in place and what the regulations are. Things can turn sideways quickly or go very well, as you've mentioned. Nobody has a crystal ball. Obviously, gold's rise has been very exciting. People in the silver sector getting excited now too. Do you see maybe a consolidation from here for some time before we see prices rise higher? Could we see prices retrace to a lower level for both? What are your thoughts on future price action, maybe for the rest of this year?
Well, the rest of this year is hard to look that far out, to be honest, because the Fed has been all over the place, and we can talk about that in a minute. But remember that January 1st, the consensus out there at a large number of banks was 5 rate cuts this year, which is insane. I said it was crazy then it went to 4, and now it's looking more like 2. But let's talk about that in a minute. As far as gold and silver go, again, I don't think you need to have gold at 2,400, even 2,300. So at 2,290, I don't care if it goes to 2,200 or even tests 2,100, because my gold equities are going to be fine in that kind of an environment. Just go back and look at Agnico's quarter, go back and look at Newmont's quarter, and read the first page of their earnings announcement. You can see they're printing free cash flow. That's because at this price, their cost per ounce out of the ground is so low versus where the gold price is, that gold producers are really killing it. That should be the first thing that people get excited about, buying gold producers, right? But then also something like Guanajuato Silver is like almost half gold, half silver, even though their name says silver. So you kind of have to look at these things and say, oh, cool. So their revenue growth is actually going to be pretty outstanding, because they have almost half of their revs coming from gold. And it's something that, is flying under the radar. But silver companies will do well too, because some of these companies in the mid-tier space have quite high costs. And so now that we're out of the woods and we're above that 25, 26 level, some of these companies with maybe a 20 all-in sustaining cost per ounce on silver are going to start kicking it. Look at even Silver Corp, SVM. I mean, their cost is nowhere near 20. It's, I think, around 11 or $12 per ounce. So, they just announced a takeover of Adventus recently. We own both of those stocks. And I didn't see that coming at all. It's like, that's how crazy this market is going to get, Jesse, is that I do this for a living and I didn't see that marriage happening. So there's going to be a lot of exciting mergers and acquisitions happening, I think, over the next 1 to 2 years.
You also mentioned off camera when we were chatting was China's dominance in commodities. Talk to us about what you're seeing there, the importance of securing domestic supplies in places like North America. What are your thoughts on China's current position when it comes to the commodities market?
I've been very vocal about this for, 2 years now, saying that China is quietly just locking up some of these critical minerals on the U.S. critical minerals list. And it's not just the obvious ones. It's like the 8th, ninth, 10th, ranked names like tellurium, we've talked about on your show before. Tungsten, we talked about on, I think, in February with Golden Metal Resources. There's a lot of opportunity there because when you look at something just like those two metals, right? Tellurium is 65% produced in China. Tungsten is about 91% produced in China. So when you look at other sources of those two metals, where are you going to go? Like, there's not a major mining company in either of those metals right now. So you have to look at the mid cap or small cap world. And we've identified a few of those, and those are pretty large holdings for us because we think that the DoD and other government agencies are going to have to start recognizing that we are behind the eight ball. And it's encouraging this week in DC, Jesse, because I did meet with 15 different CEOs, some of which spent a lot of time with their constituents in DC. And the takeaway from some pretty savvy CEOs, including Keith Morrison at Premium Nickel. I mean, he had the best, I think, take on the entire situation, which was, we're behind the eight ball, but we know we need to do something about it. And we're much more engaged now than we were even last year. So that's why we're buying things like Premium Nickel or Stillwater Critical, because these companies both met with senior, people in the government while they were at the conference and are positioning themselves for this grant money, right? Whether or not they get it, who knows? But when you have a market cap like Stillwater Critical, PGEZF, at like, let's say $20 million, if you get a $10 million grant, like, what does that do for your stock? It's going to do a lot of good things. And I feel like we're in that kind of zone right now, Jesse, where it's going to happen this year or definitely next year because the clock is ticking.
Well, let's talk about the continued melt up in the broad market. We saw the indices, the SPX, the NASDAQ, and the Dow Jones stumble a little. And, when you're looking on social media, suddenly you have all these people saying it's happening. The crash is starting. It's just this whole hyperbolic Robert Kiyosaki crash is happening now.
Right.
Here's what you need to do. And now we're seeing it recover. We're seeing all indices recover now. What are your thoughts on the continued melt up of the broad market, particularly as it relates to the precious metal space?
So we've seen some decoupling on a couple of sessions here in March and April, meaning that when we had some bad days, when you were online and seeing some people say, oh, wow, the NASDAQ's down 2% today on that Friday, the gold market was actually up that day. GDX was up that day. That's very positive. If you look at just the action today, right, after non-farm payrolls, the broad market is up huge. Gold and GDX are both down. That's okay with me. Like, that's what you want to see, people. That is the decoupling that we've not had for years in our sector, where we're being viewed as a safer haven. That's very bullish. I know it's frustrating on a day like today where the broad market's up. You want to participate in that, but you have to think of our sector differently. You have to think of it as a safer haven. I watch that I don't say safe haven because it's not safe. It's safer. And I think that when we get some type of real sell-off in the market, you're going to see a lot of money flow to our sector now that it's being viewed that way.
And let's talk about copper's rise, because this is another metal where for the past few years, we've been hearing reports that, the supply is nowhere near set up to meet the demand. to bring a copper mine online is extraordinarily expensive and time consuming. We saw complications like the Cobra Panama mine, that whole situation, a huge part of the world's copper supply being cut off. What are your thoughts on, first of all, is that the main catalyst behind copper's rise right now? And do you have any equities you're looking at or investing in that you think present an opportunity in the copper space?
I think the supply shortage is part of the reason for the ascent in price. That always helps when you have something shut off in terms of production like that, right? I mean, Franco Nevada, the largest royalty company in the world, had a huge position in that. They didn't even see that coming, right? Like, unbelievable. So no one's ever going to invest in Panama again. Forget it. It's over, for a couple of years. And shame on them. Like, I mean, really, just it's when you start looking at the world, Jesse, and start seeing how many problems exist in places like this that weren't even on the map, like a year ago, it's pretty frightening. And so we've gravitated towards heavy U.S. and Canada over the last year and a half, because there's parts of Canada like Quebec that are even better than other parts of Canada, right? Because you're getting more love. It's less of an overhang there from a local perspective. Power Nickel comes to mind. I just did the presentation at the conference with the CEO of Power Nickel, Terry Lynch, and he was talking about this as how great he feels about being in that part of Canada, because it really matters, from a jurisdictional perspective in terms of advancing the project. But to your point on copper, I think we're trading at 451 a pound right now. That's been a really nice move. We couldn't get through 4 for a while, as you know, and then we just broke through that, right? And now we hit 469 a few weeks ago. That magic number of $5 a pound is in sight, which we mentioned on your show a couple times last fall, saying that Goldman Sachs was talking about a much higher copper price by the end of 2025. And we were kind of scratching our heads saying that's like a 90% move from this price today in the fall of 2023. How are we getting there? And now you're seeing how we're getting there. It's through a combination of some supply disruption, but also, in my view, that we're seeing possibility of a softer landing. And I say softer, not soft, because copper will do well in that kind of an environment, right? Nickel has even moved, which had a terrible year last year, because nickel and copper are industrial metals. They're going to do better in an economy that is not going to crash and burn, right? So for me, we've made money in large cap copper names, but we're bottom fishing the small cap stuff again right now because there's such a disconnect. So I had dinner at the conference with Mike Gunning, who is the CEO of VR Resources, VRRCF. They recently got rid of their rare earths project for $3.6 million, which I thought was a great move. It's not part of their package. Like, they want to become known as more of a copper play at this point. And so they have a diamond project in Canada, which is outstanding, but the diamond market's a bit soft right now. So he's focusing his drilling efforts in Nevada on New Boston. And, again, did a very small raise to do that. Very shareholder friendly company. And he told me at the dinner that Robert Sin and Brian Lenny have both told him off, I guess at conferences like in February and March, that they have him as their number one copper play this year. So stuff like that interests us, right? We bought a lot of it between 4 and 5 cents. It's trading at 10.5 cents now. Have you missed it? No. Has it doubled? Sure. But who cares? It's going back to like 20 or 25 cents in my view. If you just have a couple of good holes in a hot copper market, you're going to see that kind of a stock move. Another one is Vortex Metals. We had dinner with them as well, VMSSF. Vikas has done a nice job there of keeping the capital structure intact. A lot of these juniors, as you know, make bad decisions early on, and then they have too many shares outstanding. Vikas did a real small raise here, just enough to drill his Chilean project. And this is right next to a producing mine. This isn't like, like we're going to, like Nevada, right? Where you have a huge land package, you put up 5 holes in the ground and cross your fingers. Like this is right next to a producing mine. They bought this project from that family. So it's like a local group. No issues. I think they're going to hit on their first round. I talked to John Larson, who's their main geo in the field, and he's very bullish on the project. And he has 16 years experience at BHP. So as you know, Jesse, one of my things is looking for little juniors like this that have 15 to 30 years of experience at the geo level and the CEO level. So they've seen different time periods like 08, 09, or even the pandemic in 2020, and have navigated through those times well.
Well, let's shift to Fed Powell, the Fed Chair Powell, his recent comments at the latest meeting, the numbers that came out. What's your reaction there? Obviously, rates held unchanged as most people expected. You mentioned that there was initially a lot of interest rate cuts expected this year. That's been reduced. Some people are saying that there's going to be no cuts this year now, and then that could provide headwinds for gold. I'm wondering what your thoughts are on where Fed policy is headed and interest rates as well for the rest of this year and maybe into next year as well.
I've said every single time we meet that the Fed is extremely important to the gold and silver market. It really is. And so this meeting was sort of a nothing burger because we had knowledge that May 1st was not going to be any type of move. And the only real new comments I picked up on in his speech were he's like, I don't see the stag or the inflation, right? So he is putting his chips on the table right now and saying stagflation is completely not happening, which I think is incorrect, to be that bold. But let's see what happens, right? And I think that's only going to create more of a rally in gold and silver related if he's wrong, because he's going out there, Jesse, in the last couple of interviews and being much more aggressive about this soft landing kind of, rhetoric. So I thought that meeting was part hawkish, part dovish. I didn't think it was really heavy either way. And the market, as you can see for gold and silver, didn't really affect stuff too badly. June 12th is the next meeting. It's got probably a 14% probability of a cut there. I don't think that's going to happen. The market doesn't either. July 31st is your next meeting. That's got a 35% probability of a cut being the first cut. And to me, that's still again, of a real question mark. And so that would get us to September. And that is a very stark difference from many smart people talking January 1st that we're going to see, 4 or 5 cuts. They're going to start in March. Well, hey, if we don't have anything by September, I think the market's going to start worrying a little bit, and there's going to be a lot of risk on the table in September if we don't get a cut by then.
Well, John, fantastic conversation as always. It's been great having you on. I know, first of all, fill us in on Feneck Consulting, and I know you and Don Durrett have an event coming up May 16th, I believe it is, investing in gold and silver equity. So why don't you tell us about that as well?
Yeah, sure. Don and I teamed up last year, and on my YouTube channel, which is Feneck Commodities Report, we do something every month where we get together and talk macro for 30 minutes, and then we interview a CEO in the gold, silver, copper space, generally speaking. And Don is a very tough interviewer, and we have a lot of fun with it because we both feel that the market is going to be in a better place. However, we have different opinions about how it's going to get there. So it's pretty interesting when we have talks. And I approached him this spring and I said, why don't we do an event for clients to talk for an hour and a half instead of a half hour about, what we see in the macro side, but also in gold, silver, and related equities. So that's what this event is going to be, Jesse. It's Don's first event in a couple of years like this. So I hope people will take a look at it. It's on my website, Feneck Consulting. In the top right corner, it just says gold and silver event. You would click there to get more information and to register.
Great. Well, I'll put a link to that in the description below. I'm also going to be speaking to yourself and Don Durrett, so a little bit of a preview of the event, and that's going to be on May 14th. So people should head over to the VRIC channel, listen to both of you talk there. You can also get a little taste of what the full event will be. And thank you once again, John, for coming on. It's been a blast as always.
Thanks a lot, Jesse.
And thank you for joining us today. As a reminder, this episode is sponsored by ARC Silver Gold Osmium. Visit their website at arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com for all of your precious metals needs, and be sure to tell him that Commodity Culture sent you. And I'll see you guys on the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.